in terms for Q4 FY26. But on that note, let's bring on board Abneesh Roy, Executive Director, Nuvama Institutional Equities, to take this conversation forward. Abneesh, good afternoon. Thank you so much for joining us on the show. Let's start by talking about these FMCG names, right? Today, Dabur is the latest one. Overall, with what you were expecting, in line with expectations, but for the... Oh, okay, I believe we've lost Abneesh. We'll reconnect with him. But it'll be interesting to see, because Marico reported a very good show, while Dabur did highlight some bit of a concern coming in on the Middle East, Iran front as well. And what Avenue Supermart highlighted on the flip side was that they saw more people buying more goodies from the pantry point of view, loading more on that. So that is interesting to see that we'll be seeing, maybe different companies reporting different set of numbers. A wide range maybe we could see coming in terms of the numbers as well, but we'll be seeing majorly the impact in terms of prices for raw material for them, or how is that going to be moving?
And I think Q4 will be the key determinant, and whether or not they need to take, price hikes Q1 onwards. But maybe we do have Abneesh back with us. Hi, Abneesh. Thanks very much for joining in. If you could just begin by giving us a sense in terms of, what you made of all of the Q4 updates, Marico, Dabur, Avenue Supermarts, Trent also, and which one do you like the most and why? And do you think which one do you think is possibly the most resilient?
Yeah, I think we have seen good consumer updates. So good afternoon, first of all, to all the viewers. So we have seen good update from Marico, AWL. Dabur was in line, slight impact in the Middle East business clearly there. India business has seen recovery for Dabur. Even for the retail companies, DMart has really scaled up significantly in Q4 in the store addition, and overall growth of 19% is a good number. Even in Trent, 20% growth is slightly ahead of street expectation of 18 to 19%. Nykaa again, strong growth. So generally good updates from most of the players. What we are seeing is clearly price growth will pick up now. Already pricing growth has come in edible oil companies. It has come in paint companies also. We expect that in Q1, we should see pricing growth come back in detergent, soaps, and overall FMCG. We expect 3 to 4% price growth, which is a good thing if the raw material scenario corrects. But currently, clearly, raw material is quite inflationary. So that's a challenge.
Mm-hmm. Absolutely, that's the challenge there, Abneesh. But what I also want to understand, Dabur has highlighted some bit of an update coming in from that Middle East front, some impact on that front. Which other companies maybe in Q4 will see a major impact versus other FMCG companies?
So good question. If you see most of the FMCG company, the exposure to Middle East is quite limited. It is in the low single digit. Two companies are on the slightly higher side, Dabur and Emami. So even in case of Emami, you will see that March month has been severely impacted in Middle East. So you will see the international business getting a high impact, because 1 month out of 3 months, there is hardly any business in 6% of Emami. So for both Dabur and Emami, 6% of the console comes from Middle East. So the demand is there in Middle East. The manufacturing in India is there, or say even Dubai, but because of the Hormuz channel being closed, the shipments are not happening. So that is the challenge. For most of the other consumer companies, it is in the low single digit. So it doesn't really impact too much currently at least, but Dabur, Emami are the significant ones.
So Abneesh, when you spoke about price hikes and how Dabur and Emami are impacted, at what level of price hike will demand remain insulated? Because we're in April and the war is still going on and raw material prices are still hiking, are higher. Do you think at some point it will start impacting demand when these companies raise prices?
Yes, absolutely. Some impact can be there. For example, in paints, slightly discretionary, but customer paints once in 5 years. So the impact may not be too much eventually. Second bit is, yes, we are seeing Marico report the high single digit volume growth. So we are betting on companies like Tata Consumer, Marico, Nestle, Pidilite, etc. Even for paint companies, I think FY27, we should see mix of pricing growth and volume growth. Yes, some level of demand destruction can happen because FMCG companies will reverse the promotions, which will impact the volumes because some bit of growth comes from there. So yes, it is a monitorable. So higher promotion reversal will be in detergent, soaps, palm oil, biscuit related edible oil, and of course paints. But I think most of the other players should also be able to skate through. So as of now, not a big impact. But we'll be monitoring how much is the impact in terms of how much timeline, how much is the pricing growth. It's a concern, not a big concern currently.
Not a big concern currently. So you're not tweaking any kind of margin estimates as well as EPS estimates right now?
A bit early because geopolitical is so volatile. One day, the person who started he says that it's ending. So I will say there is a risk. So the risk is there more on paint companies, edible oil companies, and bhujia snacks companies. So we'll bet on companies in which slightly deflation is also there. For example, Marico, clearly copra is big deflation, so we like that company. We also like Tata Consumer because tea is deflationary. Apart from that, Nestle and Britannia will see wheat as deflationary. So these four companies, Nestle, Britannia, Marico, and Tata Consumer, are safer bets. But in rest of the companies, you are absolutely right. There can be some EPS downgrade, but as of now, a bit early to cut because we are on the 6th day of the FY27, so bit early. But yes, there is slight risk currently.
Abneesh, just a quick one. Overall in the consumption basket then, discretionary will do better or FMCG is expected to do better this time in Q4 FY26? Trent, Avenue Supermart, that retail side has done much better in terms of Q4 update versus maybe a Dabur or AWL Agri.
Eventually, if inflation comes back in economy, obviously consumer will cut down. But what will happen? Avenue Supermart, Trent, etc. have added very strong addition of stores that is helping them in Q4 and FY27 also. Plus, what will happen? Suddenly, inflation in edible oil and some of the FMCG will make the growth optically look higher also for the retail companies. So as of now, near term, my sense is because the impact of the palm oil or even the packaging cost is a bit more on FMCG. Near term, I think discretionary can do better, but eventually if inflation risk comes, I think second half even the retail companies will see that impact, but currently retail is looking slightly better than FMCG because of these two reasons.
Hey, all right, Abneesh, always a pleasure speaking with you. Thank you so much for joining in today. That's a roundup on whatever happened with quarter four updates in the FMCG and consumption space. Time for a break now. Ajit Mishra will join in with some trading strategies on the other side. Stay tuned.